Hi and welcome. In this podcast, I would be talking about the research report published by India Ratings and Research on tracing the recovery of India's merchandise exports in the industrial sector. India Ratings analysis of industrial output and merchandise exports data suggests that the exuberance witnessed in merchandise exports in financial year 22 did help in the recovery of industrial sector, particularly the manufacturing sector. India's goods exports jumped to the highest ever $422 billion in financial year 22 after averaging at $297 billion during financial year 16 to financial year 20. Since the pickup in merchandise exports has primarily been driven by the higher exports of manufactured goods, its spillover effect was expected to be visible in the form of higher capacity utilization and an improvement in the industrial growth numbers. To analyze this, India Ratings looked at the matching category of goods exports and the industry data. Four sectors, namely basic metals, textiles, pharmaceuticals, and food products, witnessed a robust rebound in the export volumes in financial year 22 when compared with the volume levels in financial year 20. This suggests that the production in these segments benefited from the buoyant export demand. These sectors have a share of 26.4% in the overall industrial sector and form 24.1% of the merchandise exports in financial year 22. On the other hand, the sector which not only witnessed low growth in production volumes but also low to moderate export volume growth in financial year 22 were other transport equipment, which includes railway locomotives, ships, and aircraft, wearing apparel, leather products, etc. This suggests that labor intensive sectors such as wearing apparel and leather products have benefited from neither domestic nor external demand. This does not augur well from the perspective of employment generation in the country. Moreover, wearing apparel and leather sectors are under pressure due to high inflation. Inflation in clothing and footwear was at a 35 quarter high of 9.41% during April to June 2022. Overall, the sectors in this group have a lower share of 9.8% in the industrial sector, but nonetheless formed 14.3% of the merchandise exports in financial year 22. All in all, the empirical evidence also suggests that the rebound in export volumes in financial year 22 did provide a helping hand to a number of manufacturing segments amid the weak domestic demand. It has not been broad based and confined only to a handful of sectors. In addition, the agency expects that the export trend of financial year 22 might not sustain in financial year 23 due to the adverse impact of Russia-Ukraine war, leading to recessionary concerns in the advanced economies, stringent strategy to control COVID-19 in China having implications for production in various subsectors for India, and continued disruption in global supply chain and trading sanctions imposed on Russia. In case you require further insights on the points discussed in the podcast, you can check out our research report. You can also reach out to us in case of any clarifications, comments, or observations. Thank you.